Good morning, good afternoon, good evening, everyone. How's everyone doing? Alexander, Marco, Paul, how are you? Buongiorno. Didier, how's it going? Hugo, Ren, how are you? Ben, welcome to Face. It's your first time here. Okay, so let's take a look around. We're getting a little bounce in the euro. Nothing to write home about. Contained about 17 and a half. Here's a Dixie pulled back from a little over 40. Really not sure if this is it for the dollar breather. Some Elliott wave counts would take it to one more high, maybe around 93.60 before a better correction. Hello, Galaxy. Something that I'm paying attention to uh, quite closely now is Euro pound. Okay, so still think there's a shot for another low. We looks like it might be a double bottom, but we missed making a new low here by about a pip. So I'm going to be watching this. Maybe we get one more push up in the dollar into the NFP. Keep that in mind. The NFP is Friday with the US closed. So I still think it's going to be an important number with what's going on. I know some of my associates say numbers don't matter. I think I agree with Blake that they're going to matter this year. So I really don't like to have big positions into red numbers. They weren't red; they were kind of yellow for a year, but I think they're going to be red again, along with central bank action. Hello, Arena. Okay, so we finally made a new low in gold. I see no reason to buy it except for a little bear market rally actions. So up here, I was talking about that we could see 1600, 1680 so far the low, but it's a new low, right? Or it's challenging it. So maybe people think we'll get a double bottom. As long as we remain under the 1720, that's where it never looked back. Once it took out 1720, you could pause on your precious metal bullishness still. This was really the big breakdown and pretty classic technical analysis. How it rallied back to the breakdown, and now we're on the verge of new lows. Still think S&Ps have another new high left in it. There are fib extension targets from 4040, 4140. Really, a couple of good days, and we're there. I was thinking that we might peak in April. A lot of people are thinking May. Uh, but I'm going, instead of trying to figure out the time, um, why not just count on where price meets objectives rather than trying to figure out when, uh, maybe it's more important where the market's at than when some of these cycles happen, because cycles can miss, they can invert. So again, we come back to the king is price. So I'll be paying great attention to S&Ps above the 4,000 mark. Should we get there? No guarantee. I could be wrong. We could peak right here and break. Line in the sand now. You keep moving it up. It was here. Now it's here, and now it's here under this low at 38.55 is going to be kind of a problem for it. So 38.55 is correct. So that's quite a distance away. We're above the moving averages. Yen blew to new highs again, and still look at the momentum. I think we're up against some weekly resistance here. Take a look at the yen. Oh yeah, right there. So I've had this formation drawn for a long time. See what happens up there, but Blake showed it breaking out, I think, over 109, so his lines were earlier. Oil having a tough time at 62. Um, I'd like to see where oil is at when the S&Ps are, if they're above that 4,000 level. So, 62 has failed a couple times here. here. I want to see what happens up between 63 and 64. Should we get some more strength in equities and dollar is fighting its way back. The only thing that really is kind of fuzzy to me now, and maybe my line is wrong, is Canada looked to have broken out of this wedge. So it all depends where you draw the line. But right now, so far, it looks like it might negate the breakout, which is fine with me. I'd love to buy it under 125 at the 61.8 level. We have an excellent guest today. I haven't spoken to Adam Button in a long time. Adam from Forex Live will be with us, and he does a lot of seasonal work. So we'll get a look ahead at April with Adam at the bottom of the hour. So with that being said, I'm going to bring in Blake now and hope everyone has a great day trading. Good morning, Blake. How are you today?
Good morning, Dale. Well,
buddy.
it's quiet. It's quarter end, month end. It seems
NFP,
like we're just
Friday.
seeing flows come in at the very. Hold on, I'm really quick. Thanks, guys, for and hey, if you guys are on Twitter, I was just asking the guys and gals in the chat room, if you can retweet my last tweet. We got Adam Button coming in today. He doesn't get to come in that often. He's a wealth of knowledge in the FX market. I think he's a great person to interview that Dale does. So Dale, great job to have Adam in. I think today's going to be a good day because we have a couple of things happening. First of all, like I mentioned, we have the end of month, end of quarter happening today, and there's some there's a lot of talk that end of quarter just isn't as important anymore because everybody's getting their flows done earlier, and now that the whole market's paying attention to it, it's not as important. But there still is some liquidity driven flows at the end of the month and end of the quarter, so we might get some movement there. Then on top of that is today the market's looking towards Biden's got his big Build Back Better speech tonight. It's today at 4, I think it's like at 4:30 Eastern or 4:15 Eastern, somewhere around there. And let me actually see if I can find that really quick. I believe it is at Build Back Better, blah, 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 blah.
In that speech, Blake, is he going to address what he's looking to do with the corporate tax rates? Because I got a little text from a buddy of mine who's a trader, and he's saying,
yeah, that's part of it. I think everybody should know like the gist of the infrastructure spending, because it's basically I think it's split up into two parts. It comes in at about, let's see here, 3 trillion in spending, and there's talks of possible tax incentives, and
how do we pay for this too, right?
Yeah, well, and so that's the thing, and I think that's the thing that we all really need to be thinking about, is how is the market going to take this in? Because I think there's mixed feelings right now, that yes, great, we're going to get infrastructure spending, but yeah, corporate taxes I think are going from 21 to 28% for 15 years.
21 my friend said a 33% increase in the corporate tax rate and a 20% minimum tax on worldwide profits for companies earning offshore money.
Yeah,
so that makes it the highest in the world.
1% global minimum tax. And I mean, so the market's like, okay, great, there's infrastructure spending, but there is going to be higher taxes, and it's going to be inflationary.
In essence, they're taking money from corporations that have proved that they know how to produce wealth.
Yeah, with buybacks.
I'm not talking about all corporations, and the problem with buybacks is a problem that could be addressed. Unfortunately, buybacks is a side effect of the whole distorted, monetary and economic policy. Because in a healthy economy, companies would have better things to do with their money than buying back their stock. For the government to spend them for not producing wealth, that's going to be interesting.
Hello.
Yeah, I'm here. I was just waiting
I'm
for.
here as well.
Okay, I was just waiting for Steve to finish what he
No,
was
it was a
saying.
brief comment. That was it. I didn't want
Okay.
to.
So let me see if I can get back my train of thought really quick. Like I was saying, the problem with the market is I think it's going to be torn between what to do with higher taxes, a higher inflationary environment on top of, and then, are we going to get infrastructure spending? So, or we're going to get this infrastructure spending. So what's better, or what is the, what's going to be the driving force, and so it's going to be interesting to see the market reaction, although the market already has most of the information right now, as it's been pretty much leaked out. So it will be interesting to watch the response today, and that's why I think that that's a big deal as we head into month end, quarter end. But I think the flows are going to be dominating the market, and I think that's one of the reasons why the European session was so quiet overnight. But anyway, that's just my my 2 cents there. So good morning, Steve. How you doing?
Good, mate. I'm good.
So what other points do you have to make about like taxes and stimulus and what Biden is presenting here?
As always, I believe it's another case of distorted reality. That's what I believe. I mean, there are serious problems. Does infrastructure help? Yes, it does. But you need to have the savings to have infrastructure spending. What we're doing once again here is spending from future generation income to do something that's it's whenever the government does something, a lot of the money gets lost on the way, and just a small part of it produces actual economic growth and wealth. And America became like the number one force in the world by enforcing capitalism and not socialism. I mean, if you want to have government doing the spending, then why don't you look what happened to the Soviet Union? That didn't end up well. So
Yeah.
if the government is to be the driving force of the economy, as somebody wrote in a comment here, that I consider that to be a huge problem, especially for such an indebted economy. I think if the US wants to prosper once again, it needs to go back to its roots and normalize the system and give the incentive to companies to produce wealth the right way, not the 2000 type of way, let's say.
Right. Well, I guess everybody's looking at this is part of the overall COVID response, if you will, to the economic slowdown. But as we've seen, growth is actually due to I would say the Fed and government spending. Growth is we're set for a boom or a boon, however you want to look at it. We're set for continued strong growth in the economy.
I would agree with the boom, but not in that sense. In the sense a bomb goes boom.
Well, we'll see. We'll see about that. I mean, look, have we seen anything to suggest otherwise, that the market's picking up? Because we can sit here and go, oh well, the whole world's going to blow up and we're going to be turned upside down. But as far as the market's concerned, it doesn't care.
Yeah, no disagreement there. I'm 100% with you.
Yeah. So
Guys, we have
the market
AGP
continues to
coming
go
up
high.
in
What's that?
ADP in 1 second coming up
Oh,
now.
thanks, Stelios. I appreciate that.
517K versus 550 expected, so broadly in line.
Okay, so for those of you, Stelios was not on his toes.
Nope.
There you go. Just kidding. Hey, ADP in 1 second. I'm just kidding, Stel. Thanks for catching that. But here's the data, and if you guys, just pull up Data Flash on Forex Analytics. Thanks. By the way, Stelios, do you have any opinion regarding this conversation that we're having?
Well, this infrastructure plan is definitely something that the markets are going to like, I think. And
okay, well, let me stop you there
Yeah.
really quick. Do you think it's gonna like it? Because as I pointed out, alongside with this big infrastructure spending, we are going to get
the tax increase,
some idea as far as what's going to happen with taxes. And
Yes.
isn't all this spending going to be inflationary? In what, again, I was trying, this is the point I was trying to make, is in a period of quite possibly will be lower growth, we're going to have inflationary pressures and slower growth, because all the growth that we're seeing right now is because of the spending that's happening right now. If you think that, and I'm in this camp, if once the economy tries to stand on its own 2 feet, growth is going to be very marginal. So we'll have a higher inflationary environment with probably little to no growth. Then what happens? Then we have, what do they call that, Steve?
Stagflation.
Inflation.
Well, we're all making the assumption this is going to pass. Harold Malgrim said that the administration takes 10 months to really get their sea legs, and he didn't think that they'd be able to pass the tax increase with just a split House and Senate, pretty much 50-50.
Yeah, and I think that's another good point. Is, well, how I think Biden's plans are going to be very optimistic, and whether pieces of it or even any of it's going to be able to pass is going to be interesting.
Yeah.
Moving forward. So I don't know. I'm kind of indifferent right now, and I think the market knows what's coming, and I don't know if the market's set to respond or not. So
I personally think everything that they're doing now is inflationary. That's what they're trying anyway, and I think that this plan is something that the market is going to like. But the problem is, like you said, how do you fund it? And by increasing taxes, you are, it's I don't think it's the right way to do it, but in any case, increasing taxes will have an effect, not an immediate effect. I think that what we're going to see is the market kind of being buoyant on all this. Yes, great, and then suddenly, slowly, we start realizing that inflation is going higher, growth is not going to be there, exactly like you said, Blake, and that's going to have a negative effect on corporations, valuations, everything. So I think that in the very short term, the market's going to probably like this, but then we have yet another reason to fear the next leg lower in equities coming. It's going to come at some point. How deep and how fast is it going to be? I don't know, but it's going to come.
Hogwash! It ain't coming.
Yeah,
Stocks are going up forever.
It's going to come when everybody thinks it's never coming.
That's right. It's never coming. So, let's talk about some things that are moving right now, and let's talk about what is happening with the euro. So the euro is finally finding some support ahead of a long term, and I say long term. Let's go out to a weekly chart really quick, and let me reset this. We're at a long term 38% retracement. This is from the post-COVID lockdown lows, when the euro hit 106. We rallied to 123, and now we're back at and very close to a 38% retracement. As you guys know, and I've explained to you guys on numerous occasions here, I'm actually looking for us to move down to 116, but as we pointed out in Forex Analytics overnight, that we are closing in on that 1693 level, and we should be expecting some buyers here. And we found some buyers around these levels. I don't think that that's altered the course of the euro as of right now, but I think that you have to keep in mind that the euro dollar is probably going to find a little bit of support. One of the other big moves, I'm sure you guys are following it, is look at this dollar yen. It is absolutely on fire, and it's also taking up every other yen pair as well. I mean, if you look at like the euro yen is, closing in on that 130. And we should, also note that if you go to a weekly chart, this is a multi-decade trend line. I say decade, well, I guess it is 2008 all the way to current time frame. It is a multi-decade trend line, but definitely multi-year trend line that comes in around, just above the 130 level. I honestly didn't think we would be right back up here again. I know Stelios, you've really focused on this one on a short as of late. I traded it on the short side too. The bounce back to 129.50, I was like, okay, I could see that. But the next leg higher, it's just mimicking the rally that we're seeing in the dollar yen. Do you guys have any opinion about the dollar yen other than it's breaking out?
Well,
What
I've been
other
short.
opinion?
Sorry.
I mean, what other opinion? That's the fact. I mean, it's, it remains very, very well bid. It's broken out, as you said. I think it's due for a pullback.
Okay, but do you think it's moving up because of yields? I'm sorry, I should probably rephrase that question. Do you think it's moving up because of yields, or do you think it's moving up because of the market's looking that equities are moving higher? Maybe the yen is recorrelating. We're seeing some yen weakness as a result. What do you guys think is the predominant driver here, aside from technically? I mean, technically, the dollar yen is literally pushing above this 5-year trend line. So it's technically it's extremely bullish here. But any other thoughts?
I think it's because of its correlation with yields, and it now coincides with a move higher in equities because yields have recorrelated for the time being with yields, because this was a very strong persistent correlation over time. I mean, yields and the S&P, for example, were very well correlated, but then we broke that strong correlation for a long period of time. So the yen, it was one of the reasons why the yen had, in essence, got stuck in a long-term triangle. So now we've recorrelated. I don't know how long that's going to last, but yeah, I believe the main driver for the USD yen remains the yields.
Well, okay, Stelios, do you have any other opinion here?
I agree with that. I don't have something different to say. No.
So bottom line, I think, we get some risk off. I think we're going to see yields pulling back temporarily, and that should also get USD yen moving lower along with equities, but for different reasons.
Okay, well, what you're seeing here, and this is the chart that I wanted to bring up, is we're seeing that move higher in, here's the yields. This is the 10-year yields, by the way. And we've got this nice little channel that's moving higher. And you can see the dollar yen has actually exploded higher. And so I'm wondering if we're playing a little catch up to yields, or if it's just suggesting that yields are going to continue to break out to the upside. And will this move higher in the 10-year yield eventually weigh on equities? What do you guys think there?
It's unavoidable, I think. If it continues higher, it doesn't matter if it's going to be slow and steady, or if it's going to be explosive. Obviously, if it's explosive, it's going to have it's going to cause a reaction immediately. But even if yields keep creeping higher in a slow, methodical way, it's just going to take a little bit longer for the market to realize that, unfortunately, these still extremely low historically yields. Let's say we go up to 2%, right? It's still going to be historically an extremely low yield, but under circumstances, which is that we have an extremely high debt that's explosively moving higher, it's still unavoidably negative. So, at some point, equities will react to it. There is no question about it.
Yeah,
I
I
guess
agree. I agree. When 10-year went from 0.5% to 1.5%, I thought, now is the time when equities have to start taking notice. And I said that, but they haven't yet. But I agree with Steve. It's unavoidable eventually. We know that we're this high mainly due to yields being zero or close to zero. So as yields reverse, so should equities.
Yeah, so and it's interesting because the market has very much brushed off this move higher in yields, on the longer end and the 10-year. I mean, you look at the 30-year yield has also moved up quite dramatically, and the stock market has really just kind of brushed it off and said, well, that it's stronger because of growth outlook is going to be better for the
Look at
markets.
the divergence, by the way, right? The 10-year yield produced a higher high, while the 30-year hasn't, along with RSI divergences, etc. I think.
So what's that tell you, Steve?
I think we're close to a turn. I don't mean like, finding the high and then pushing to the, record lows, but I mean, everything seems fatigued, if you ask me. Stock indices up here seem fatigued. The USD yen, I think it should be running out of steam soon. The yields seem to have a lot of momentum divergences, and they seem to find it harder and harder to push higher. I think we need at least a temporary pullback in all these assets before they can continue.
All right, good point. Forex Gal asked about copper, and copper has really it spent the last month stalling at the 161% extension. I believe that was one of our charts of the day about a month ago when we were at the 161% extension, just I think at 4.20, and since then it's moderated a little bit, but it's this is very much mimics like the Aussie dollar, which I want to point out the Aussie as we head into, especially as we head into today, because once we get through today, the end of month, the end of quarter, it's going to be interesting to see what the Aussie does, because I don't think anybody really wants to pull the trigger ahead of month end, quarter end. So looking at the Aussie, everybody here should note that we have this big head and shoulder pattern being set up. Talked a lot about it over the last couple of weeks. In the week ahead video over the weekend, so on and so forth. We do have this bearish pennant that's trying to play out, and you could probably just drop that lower trend line and say, okay, well, that's really a flag. So why that's so important is you got to watch what happens today, because if we take out the lows for the day, which would be like 75.80 roughly. I mean, I know the lows are 75.88, but we really would have to take out, well, actually you can just think about the neckline. Just in general, that would take us below 75.50. But if the Aussie starts to materially, weaken today, this is a great example of an asset that is really diverged away from rallying risk assets such as the S&P or the Nasdaq or the Dow or the DAX for that matter. We've seen the Aussie really peak a couple of months ago, where most equities are moving higher, and that's the same with copper. Copper has really peaked. I think if you take the three, let's go over to let me go back to copper really quick. Where was it? I just had it.
Technically speaking, copper hasn't done anything wrong yet, though.
Hasn't what?
Technically speaking, copper hasn't done anything wrong yet. I mean, I just see for the time being like more a correction in time than in price after a huge move higher. So if you ask
You're
me,
right.
it still looks very, very, very healthy.
Yeah, it does. But what I wanted to show you is here's copper. Let me go ahead and add. Let's add the S&P. But I want to. Oh, I have it here. Never mind. Let's see. I can do this. Okay, there's the S&P. Let me drop in the Aussie dollar. And okay, so the reason why I want to point this up, these are weekly charts. Okay, so we have copper. I guess copper and the Aussie both peaked at the same time.
Yeah,
And
that's
the exact same week,
frequent.
but the S&P
Yeah.
continues to grind it out higher. So what were you going to say, Steve?
Yeah, that's frequent. I mean, they're very, very well correlated with each other. The only thing that's troubling is that from these markets, one of them is manipulated. And for example, just by looking at the chart that you're showing, just look at the period that the Aussie was moving significantly lower, last year, and look at the S&P that was like pushing higher without, caring about it. So the correlation is usually strong, but whenever there is a decoupling, guess who does best?
Well, yeah, and so
Yeah.
and I'm going to leave it with this because Adam's probably here with Dale. So I just want to say Canadian GDP came in better than expected at 0.7%. You can see it here on Data Flash. But along the lines what Steve is saying, then what we have to watch is if the quote unquote manipulated market, being the S&P, pulls back, then the Aussie and copper probably will follow suit, and maybe a little bit more aggressively. So. Steve Stelios, thanks for all of your thoughts and ideas. I know Adam's going to be here. I'm always excited to hear what Adam has to say about the markets. Dale,
Yes, sir.
you can take it over from here.
Okay. Adam, I've made you a panelist, and if you can unmute, welcome back to Face. It's been way, 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 way too long, buddy. How are you?
I'm doing great. Oh, I try to put the video on. I guess we're not doing video. Oh, start video.
No. You can
do video.
Oh, there we are. Okay.
All right.
Everyone.
All right. Hey, Adam. Great to see you. You look younger than ever, even with kids and everything, huh?
No, three little ones here, so we'll be running in a second.
Yeah, 3 now.
Yeah, they just keep coming.
All right, you're prolific. Okay, so let's kind of talk about what you might be seeing for April. I know you pay attention to the seasonals, and I think the last time I talked to you was at Trader Summit, Adam, and that was after the COVID crash. And I'm wondering if you were surprised the way energy prices came back, because I don't think that you thought back then, and not many, that we'd have this type of recovery in the energy complex. Am I correct? Is my memory serving me?
On the contrary, I was very bearish on oil. I thought it would go negative, but also very bullish coming back. And I've actually been really hammering away at oil. If you want to start with oil.
Okay.
This is such a classic boom bust. I mean, every commodity really works the same way. Prices get too high, a ton of production comes on, which is what happened with U.S. shale, and then you have overproduction and prices collapse. And of course, the pandemic, compounded the whole cycle. But now you're at the point where there's no investment coming in, and the timing from October to now, really almost doubling oil prices, is a little bit, it's unpredictable, right? But that investment is too low to meet demand. Plus, it's compounded by ESG and environmental concerns and the lack of lending into the oil market. And really, demand will continue to grow, or at least stay flat for the next decade. And you have traditional or conventional oil running off at 3% a year, OPEC staying very disciplined. And I'm extremely bullish on oil and oil companies.
Okay.
So I think there's a huge inflationary trade there.
Okay, so there you go, the key word, inflationary, and most of the commodity complex has been responding, except for the yellow metal. I'm wondering if you think this is going to set up a pretty good buying opportunity. Anything in April for precious metals?
Yeah, it's not a great time. You really had that towards the end of the year, nice time for gold, and we kind of had that bump through year end again this year, so it worked once again. But I think it's a good time to be on the sidelines. If you want to touch on seasonals, people might have heard it by now, but it's really the best month for risk assets. April. The stock market over the last 20 years is by far the best month. And then if you break it down into FX, it's a very good month for cable, for oil, and for CAD, are right up at the top there. Softish for the dollar index. And that's sort of and they're all very strong trends, like either the best or the second best month in all of those ones I just touched on.
Okay. So
So
we've had a pretty good rally in the dollar. So April may be the pause to refresh, or do you think there's more left after maybe a period of weakness in April for the dollar on the upside?
yeah, what a turn it's been, right? Since the start of the
Yeah.
year, everybody was bearish, the dollar
Yeah.
coming year. And it's such a classic thing where everybody's bearish. And I did a Twitter survey yesterday on where do you think the 10-year will go next, 2% or 150? And it was like 70-30 to 2%, right? So everybody thinks yields going higher, which is by proxy dollar strength as well. And maybe, we get that little bit of a pullback and we do see 150 before too, but that's sort of hard to square if you think stocks are going to run away in the month. But there's certainly, even flat in 10-year yields is almost negative for the dollar. If it is negative for the dollar, if we see risk assets do really well.
Yeah,
And
it's
I
hard to
think,
it's hard to see a big surge in the dollar happening for, I've heard targets in S&Ps anywhere from, 40.80, 41.40. I mean, we're really not that far away. Do you think that there's a lot higher than that, 40, say 4,200, before we see some type of correction? And there's so much to talk about. I mean, people are thinking it's a done deal that Biden's going to be able to raise taxes, and along with his infrastructure spend, what's another 3 trillion? Do you think that he's going to be able to, in a divided Congress, to raise taxes? Maybe.
yeah,
Uh,
I mean, predicting politics has made a fool out of everyone the last long.
yeah,
But
yeah. Tougher than predicting markets.
it sure is. And you get the politics right, and you might not get markets right anyway. But if I look at it, I think they got it through the first time. You must have a sense from the key congressmen that they can push this through, that they want to push this through. So, and then the tax increase, of course, it gets watered down, right? And then it's a question of, all right, how much of a corporate tax increase will it take to hurt the market? And that's a difficult one to answer, because the rates that are, the posted rates aren't necessarily the paid rates for a lot of U.S. corporations, especially multinational corporations who can move those profits around. So, at $3 trillion in spending is undoubtedly bullish. And if you want to look outside the U.S., you can see the knock-ons. Really, since U.S. yields broke out, or since almost the start of the year, the Canadian dollar has outperformed the U.S. dollar. And I think there's going to be a lot of knock-on effects for the Mexican peso as well, once the COVID, once they get around the bend on COVID, which is a ways off yet. But there's a lot to like there. But the flip side is Canada might have an election as well and raise taxes. So
How about Canada raising rates? I've spoken to people that think that they may be the first to move forward with tapering. And
yeah, that's priced in, and they overdid it, right? They started doing $5 billion a week in QE, and it was way too much. They went from zero to almost half the bond market. And they didn't, you get a stock and flow sort of argument about what matters, but I believe it's the flow. And now the flow has to stop because they went too hard, too fast. And then you have just an insane housing market in Canada, which I also think is coming to the US. But
coming.
Well, I listen, you think it's crazy in America. It's another level here.
Okay. I mean, it's already like that. I mean, what you list your property, and you're going to be able to sell it above your list price, and people are having a hard time being able to buy houses because the competition is so intense for anything out there.
I believe it's still early innings in the US. I mean, if you just look at relative to even Canada, which our incomes are, maybe 30% lower than the US, it's almost double here. And if you take, kind of comparable cities, it's out of sight. And this spring, I think, is going to be insane. A lot of people think it's going to cool off, and then that filters back through, right, to spending and everything else. But on the interest rate side, something has to be done. But I don't think the Bank of Canada wants to be the one on housing, so it becomes a real regulatory back and forth. But that, I'm not so concerned about. It's more on the tax side, that, everybody's worried about rate hikes. I think the tightening is going to be fiscal tight, not monetary tightening, but fiscal.
Interesting.
And,
Okay.
then it becomes execution, right? Because if it's just tax hikes on people making over $400,000, it's not really a factor for markets, right? You might get, if it's capital gains though, well, you're going to get a lot of selling before year end if people think capital gains hikes are coming in 2021, right? If they can stall it out until then. So it'll be interesting to see, but I think that's where your eye has to be. And Biden, it's an important speech today about what he says, but I think most of it's leaked already.
So did you in Canada have forbearance programs and renters moratoriums? And it's one of the strangest environments for a super boom in real estate I've ever seen. With a lot of people haven't been able to pay rent for a year, and people have been in forbearance for a year. Do you think that's going to have any effect? And do you have that up there in Canada, or?
We have similar programs, not as aggressive as the U.S. And
Okay.
I think it is worth watching that. And I think I'm coming around to the idea that the fraud in unemployment programs is way beyond what people think, and economists can't really model it in. But just the level of jobless claims have been so high over and over, and it's same here in Canada. And I think we're underestimating how much fraud is in there, and whether the government goes aggressively after that. Because that's all money that keeps circulating.
Yeah.
Whether some of it might be saved, some of it might have been spent already. And then the same with rent. If people are saving the rent they didn't pay, there's kind of an argument for just not paying your rent and finding somewhere new if you want to live for free for a year. But otherwise, the opposite is you didn't pay your rent and you have no money, and now you're evicted. And how are you going to find somewhere else? And then you
Right.
have more housing on the market, which is your point. So is very in flux, but I think that the portion of people that applies to is small enough, and the mania that's growing in housing is big enough to swamp it, to overwhelm it.
Okay, so the mania, I guess the only thing that's going to ever stop the mania in real estate is going to be uh, maybe interest rates or a change in the tax code where maybe people don't get free capital gains on living in a house. I mean, there are housing shortages happening with this at the same time. So,
I don't think capital gains can do it, because you're really going to buy a house anyway. But it is what you say, interest rates, right? Nobody looks at the price of a house anymore. They look at the price of the payments.
yeah, it's like a car. It's the way cars used to be, Adam.
And then it's supply. How much? I mean, America is the great builder of the world, and that is, the zoning laws are not as restrictive as somewhere like here. It depends. Everywhere is a little bit different, but in some places where Blake is in Arizona, they seem to be building like 10,000 houses a year. Whereas in other places, it's California, maybe it's very difficult. So, how fast they can do that, but you have shortages of labor now, shortages of supplies. Builders have, in some places, tremendous sway. It's like an oligopoly, right? In some places, because they own all the land, they release it slowly. And there's still the scars of the housing crisis in the US, but I just think it's going to be a tremendous tailwind for the next year, 2 years, 5 years, maybe, so long as the Fed keeps rates low.
Speaking of tailwinds and, in fact, hurricane force winds, what do you think of the last several months in crypto, where it's really, the adoption phase started a while ago with PayPal accepting it, and these prices in crypto, really amazing. It seems to be growing and and accepted, and I just still can't wrap my head around it. What are you thinking here? What are you
I
telling
look at
people?
something like PayPal, and it's good headlines. We saw the pop yesterday. But if you've ever bought something in a foreign currency on PayPal, it's like the fees are incredible. Like the spreads you'll get on a foreign currency transaction are awful.
Nothing. Yeah.
Even compared to and I weep to imagine what they might be on crypto. And then but it's more speaks to the psychology of the market, right? Good news is really goosing the market. And I think you just stay long until there's an ETF. An US ETF is coming, and it's going to be huge. And I think that probably takes Bitcoin to 100,000 and sets off sort of the final frenzy of this round. And I think it's just as simple as that. Stay long until at least, I don't know, a week after the ETF launches. And that
Okay.
might signify a top, which I expect to be. And once you start to get close to 100,000, I think it just acts like a magnet. And, we've held up pretty well in this consolidation, and it's probably ready to run again sometime soon.
Okay, so GBTC is a trust, not an ETF then. I always thought it was an ETF. Thanks for educating
Well,
me.
yeah, no, it's not as, I mean, we need something that's really almost one-to-one with no,
Okay,
miss. So they're coming.
okay. And anything that you see in the other commodity markets, we've had a huge run in grains, and people talk about supply chain disruptions causing the inflation that you're talking about, like what we had temporarily in the Suez Canal. But the Fed can't print corn or soybeans, and their weather markets, and people say the Fed wants to get the inflation rate up to 2%, and I say go grocery shopping. You're there. What do you think about what's happening across the whole commodity spectrum? Is this, some people are talking about a super cycle in commodities? Adam, are
And
you buying into it?
I am. And I think there's, a lot of questions around, prices, it won't, some of these things won't last forever. Lumber's insane. Copper's I think there is a super cycle in copper, undoubtedly. But lumber's a more interesting one because there are a lot of trees out there and a lot of mills that are offline, and yet prices right now are at record highs. And, and if I believe in a housing boom, there'll be more of that. But that supply demand picture, it's a little bit beyond me in some of these things where you can bring on supply relatively quickly. Whereas a copper mine, it's 3 years, where oil, it's
Right.
30. But then the inflationary mindset, and I think that is coming, right? So you say it's home builders right now. They're saying, well, we got to boost prices $30,000 because of lumber. Sure. But when lumber comes back down, I don't think those price hikes are coming out. And I think that's the same in a lot of manufactured goods. Once you have risen prices and there isn't enough competitive dynamics in the market to pull it back down, I think they just get re-benchmarked higher. So, a lot of the talk right now is about this 2022 inflationary bust, right? So you get all these one-offs right now in 2021 and a huge spike in demand, and then it goes away in 2022, which is really what the Fed is saying. I don't think it does, because I think you realize you have a bit more pricing power than you thought, and I think they keep prices up even if some of the steam comes out of some of the commodities or some of the supply chain issues are sorted. I just don't see them giving that back.
Yeah, then why not keep the margins, right? I mean, prices go up on a rocket ship and come down on a parachute, if they come down at all, right? So they keep that spread. The producers keep that spread when they're putting it out on the market. What do you think about China and what they're doing? A lot of people say that like what we're going to do in the U.S. is kind of socialism, and how could it succeed? But hasn't China been successful with, kind of a controlled grip on their whole society? And
Well, that's the message at home, right? In China, it says, listen, we crushed it in this pandemic. We're growing. We see, mess of politics everywhere else. And so they've really strengthened that national spirit. But what really is worrying me at the moment is I look at two charts, and one's Aussie dollar and the other's the Chinese stocks. And they're both this big head and shoulders in the Hang Seng or other, and they're down big. I mean, they bounced a little bit lately, although down again, mostly overnight. And I just don't, I'm worried about that, right? Because you take two of the regions that did best against the coronavirus, and it would be China and Australia, New Zealand, right?
right.
And both of them are really soft right now. And I can't, Australian dollar is strong seasonally in September. I don't see a great reason to be short Aussie, maybe other than their own fight with China, which is getting pretty serious. They might halt iron ore imports from Australia. But, in that whole picture, there are some, they're kind of out of the coronavirus, especially China, and it's not so strong there. And you ask people and you say, why is China so weak? And you can't really get even a coherent answer. There was some talk of tightening up, policy, deleveraging a little bit, but then they really unwound it. So it's not a real thing. And it's a bit scary on the global demand side there that China would be soft. And maybe that speaks to what happens in 2022 in the US. But I don't think that's the trade right now. Coming out of this is going to be the most euphoric time. We have ultra low rates, easiest fiscal policy, and the grand reopening. I mean, this summer it's pure euphoria in markets and on the ground. And I just think you got to ride that wave till August at least.
And why August? Do you think that some of the variants can create some doubt about the protection that vaccines are giving people?
No, not. I mean, I hope not. I hope that's obviously, but I think once, you get there's the anticipation of the boom and then the boom itself. The anticipation of the boom is almost better. It's like sometimes they say a vacation, the best part about vacation is anticipating the vacation. And then the vacation itself, it's nice, but that
it's
sort
a
of
journey, not the destination.
It keeps you going through work through, us in Canada, book one in February so you can get through January. And
right.
And so when the numbers start to come out in August, then you say, okay, July should be insane. It starts to flatten out somewhere around there and say, all right, people got to get back to normal. You can't go to a restaurant every night.
Right.
So then I think it's somewhere around there. You say, all right, let's take a bit back. And then we talk about capital gains later in the year. So there'll be some selling around that, just the general uncertainty. But I think that is the trade right now. And coming into April is the best time to put it on. The amount of bearishness I see in a lot of things is surprising to me. So I think all these growth trades will do very well. And I think the market gets over this round of coronavirus pretty quickly, like it has every other round.
Okay, well, I'm a believer that currency, like the name of your company, has Forex in it, that it is the fulcrum for everything: bond markets, stock markets, commodity prices. And the big debate in the dollar is that right now, what we have, even if it weakens again in April, is that we have a bear market rally happening in the dollar that could take the Dixie back to, say, 96, 97. The euro maybe. People have targets down around 115. More aggressive is down around 111, 78.6 back. Is that going to be the last best selling opportunity in the dollar after this bear market rally, or are we going to get a blow off in the dollar by some of the people who talk about the milkshake and emerging market debt, where it could really surprise everyone, and that would be deflationary for financial assets anyway?
I don't see it unfolding that way in any sense. I look at, what's been the best? So the U.S. bonds broke above 1.2%, 10 years. Yeah. February 16th. That was it was a gap higher, went up to 131 that day. Yeah. And since then, the worst performing.
Good memory.
I was writing about it yesterday. The worst performing currency in that time is the Swiss franc. It's down around 5% right. U.S. dollar. Yeah. And, carry is the ultimate kind of value of a currency. You get paid to hold US dollars right now, and you're paying to hold Swiss francs or euros. And so much of that flow is, and if yields continue to move higher in the US, even if it is on fiscal irresponsibility, it's still better than holding boons or Swiss debt or a lot of other things that are out there. So I think, it's speaking to the larger picture, maybe, but I just don't think that's the trade right now to worry about the dollar. Inflation is much more likely. And unless the Fed really gets irresponsible, I don't think you create a negative feedback loop like the Turkish lira or something like that. So, I'm pretty upbeat on the dollar right now in general. Okay. I don't think for this month that's necessarily the case, but the market's still pretty negative on US dollars until maybe you get vaccinations in emerging markets. And I think there's some money to come out of the US dollar there. But, if you're in Brazil right now, do you really want to be holding Brazilian real or US dollars? Like, it's getting bad.
Great point. Yeah.
And it's not the only place, and it's a long haul. You talk to people down there, they think, yeah, I might get the vaccine in a year. It's easy enough for me or you or most people listening, I suppose, to hold on and say, yes, I'm going to get it in 3 months or at most. Whereas, that's
Are
a
you going to take it, Adam? I know it's a personal question. Are you going to get vaccinated?
I can't wait.
Okay.
I'll,
I'm there, buddy.
Oh,
I've
good
had
for
my,
you, Dale. I'm glad.
well, good for me. I'm 80 years older than you.
My
So,
sister-in-law is fighting with it for weeks here now, and it's not pretty.
all right. I don't do this often, but I have a question from one of our attendees. Adam, what are your thoughts on Canadian mortgage rates going up soon?
Well, I'll tell you what I did with mine, but mine was just refinance the whole thing. And I was going to write about this actually for a mortgage website in Canada, and yes, I think they're going up, which is why I did it. You could get a 10. Canada works on 5-year rates, so in 5 years, I don't think they're going to be tremendously higher. But I was coming up to a refi anyway, and I hedged it with rate reset preferreds, which are bonds. Well, they're preferreds that ratchet up as rates move up, and they kind of move inversely to the rest of the bond market. So if rates move up, they go up a lot, and they have gone up a lot in anticipation of that. But yes, I think rates are going higher in Canada. That's a pretty easy call, I think, over the 3 years.
Okay, so we haven't talked for a while. What's been going on at Forex Live? Any new features? Anything you want to tell the audience?
We're doing a lot of, trying to do some more educational stuff. Nothing new launched. We're just providing live analysis every day on what's happening in the market, in the news, and just trying to make sense of the world. I've been writing about since the January 9th, I wrote a big piece arguing for US dollar strength when everyone was bearish. And that's the sort of stuff that we try to put out there. And some of it's ideas, some of it's just chatter, and trying to figure things out. I don't believe that everybody figures things out overnight. So it's really a journey of, talking to people like you and sharing ideas. And that's it's a bit of a stream of conscience sometimes, and it gets to where it needs to be, I find a lot of times. So yeah, come check it out. And if you're wondering why the market's moving, it's usually the best place to find out why, especially if there's been a quick spike that just happened. So,
well,
yeah.
I've really missed talking to you, Adam, and this proves it. Sometimes you don't know what you have until you haven't talked to someone for a while, and I'm not going to let this type of time lag happen ever again as long as I'm breathing. So I really appreciate you coming in, stepping up, and I'll get a hold of you, and I'd like to have you back in the regular rotation, and really appreciate your insights. And you're one of the best at what you do, Adam. Great respect from me, my trading warrior brothers. Thanks for your time today.
Right back at you, Dale. It's always such a pleasure talking with you.
All right, my trading warrior brother, Adam Button. You can find him at Forex Live. Adam's one of the more insightful guys I know, and I could ask him anything, and he has an answer for me. And really great interview today, Adam. Good hunting, and I'll be in touch with you soon, partner.
Cheers, Dale.
Okay, everyone, that's a wrap. Remember, don't just count your pips, count your blessings. Glad you enjoyed the interview with Adam. Remember to join the team on Morning Edge in about 17 minutes. And that's a wrap for me. Good hunting, everyone, and see you tomorrow. Thank you, team.